Hey guys and gals, welcome back. I tricked you. My picture is not at the top right, it's a little bit down. Here I am. Greg Silverman here, CIOs, coming to you from the Louvre in Paris. From the Louvre in Paris, another Come Learn With Me article. This is one of my favorite topics, gold and silver. I'll have to tell you that. If you want to learn how we implement some of these through investment choices, stick around to the end and there'll be a little URL popping up and you can follow that. Let's go. 3 gold and silver ETFs for hedging rise in inflation. So far, 2021 has not been a good year for either gold or silver bulls. Year to date, both precious metals are down 2.5% and 5.5%. Meanwhile, according to October CPI released by the US Bureau of Labor Statistics, consumer prices are surging. CPI increased by 6.2% year over year, the most in over 3 decades, and was up 0.9% on a monthly basis. You are distracting me, sir. Okay. Concern over rising inflation levels has put precious metals in the limelight as prices have edged higher in recent weeks. Depending on personal investment objectives, most financial planners typically recommend a 5 to 10% allocation in precious metals, which could act as inflation hedges. There are different ways to invest in silver and gold, starting with buying the physical metal. Today, we introduced 3 exchange-traded funds that could appeal to readers who believe there could be further glitz in gold or silver. Spider Gold Shares, GLD. Tracks the price of gold, 40 expense ratio, just so you know. Tracks the price of gold bullion. Global market forces determine the price of spot gold over the counter, 24 hours a day. The majority of demand for gold comes from investment and jewelry making purposes. As we write, the metal hovers at 1867 per ounce. The fund started trading in November 2004. Net assets stand at 58.4 billion. In fact, GLD is the largest physically backed gold ETF in the world. I think, don't quote me on this, but I think GLD ranks as one of the highest holders of physical gold, bar none, in the whole world. Maybe some other sovereign central banks. Year to date, the ETF is down 2.4%, hovering the past months up about 5%. The $180 level is likely. So 180 represents $1,800 in the price of gold. It's likely to act as resistance in the coming months. In the case of short-term profit taking, interested readers could consider investing around 170. We expect gold bulls will continue to have the upper hand in 2022, and 190 may well be the next target. It's their prediction, not mine. Just so you know. A side note, Spider Gold Mini Shares, GLDM, is another similar ETF buy with a low expense ratio. Okay. Silver, iShares Silver Trust, also for the 0.4% expense ratio. Ticker SLV might appeal to investors looking to invest in silver through their brokerage accounts as opposed to buying the physical metal. SLV provides exposure to the daily movement in the price of silver bullion. As reference, it uses the London Bullion Market Association silver price. Most of the global trade in bullion is based in London. The fund started in April 2006 and net assets stand at 13.8 billion. So I believe it would also be a lot of silver. So far in 2021, silver is down 5.4%. However, in the past month, the fund returned more than 7.5%. Silver, like gold, is regarded as an asset to hold for investment purposes. In addition, around half of the annual demand for silver comes from industrial applications, in part due to its high levels of thermal and electrical conductivity. In other words, economic activity and growth can easily influence the price of silver, which tends to be volatile. Buy and hold investors could regard the 2250 level as a better entry point. Sprott Gold Miners ETF, expense ratio of 50%, tickers SGDM, invest mostly in large and mid-cap gold miners. So very different to investing in the stock of miners than to bullion. SGDM, which has 35 holdings, tracks the returns of the Selective Gold Miners Custom Factors Index. Canadian companies have a hefty 78.1% share in the fund, following by miners based in the US and UK. The top 10 holdings comprise around 60% of net assets of 252 million. So it's not huge. Newmont Gold, Franco-Nevada have the biggest slice with 99 and 9% each, respectively. Next in line of Barrick, Wheaton Precious Metals, and Kirkland Gold. Get that into the vaults. Fund is down by 1.6% this year, but returned more than 9.2% in the past month. Given the recent rapid run-up in price, short-term profit taking is likely. Potential decline toward 28.50 would improve the margin of safety. Finally, there are several other ETFs that give exposure to both gold and silver miners. Examples are Prime Junior Silver Miners, Global X Silver Miners, MSCI Global Gold Miner, Gold and Silver. Okay, it's quite a few. We'll just chuck these in the notes. This one's interesting. I'd love to look at a bit more of this one. SILJ. All right. Well, you guys check it out. Oh, let's do it. Come on, let's just do it together. SILJ. I'm just curious what companies. Let's see, do they have holdings? There you go. Holdings. See what stocks I got. Top 10. Oh, that doesn't look like a top 10 holding, does it? Okay, well, we're disappointed. Let's refresh that just in case. Holdings. Well, there you have it, guys, an undiscovered ETF. Just kidding. All right. Well, there you have it. Gold and silver, one of my favorite topics for all sorts of reasons. But interesting article nonetheless. And head over here if you want to know more about our investment programs, AMS, more about my philosophy and process, etc. And look, we hope to welcome you in to our club and make some sense of the noise. Greg Silverman, outside of the Louvre. Ciao for now.